Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Namaskar. My name is Shishir. Welcome to the latest episode of State of Economy. Today we are going to talk about various high-frequency economic indicators which are showing very promising signs for the economy. But there are some economic indicators which are causing some kinds of disappointment. To talk about all those things, we have with us Mr. Devendra Kumar Pant. He is the Chief Economist with India Ratings and Research, better known as Ind-RA. Dr. Pant, welcome to the show.
Thank you.
My first question to you about the GST number. This is the second highest collection since the inception of GST, 1,72,000 crore rupees. What does it mean?
Shishir, we should be mindful of interpretation of these numbers. And whenever we are trying to extrapolate and try to frame a view on the economy or the rest of the year, a number of 17 lakh crore is a very good number. And it's only after April 23 when we had 18 lakh 70,000 crore number. Why we had this high number? Because you see, even if you look at the festive season, which has started mainly from the Ganesh Chaturthi, and then after that the Puja, and now the Diwali. And most of production which takes place at least a month before the Diwali. Now, the number which it has grown, 13.4% on YOY basis. Number is no doubt very good. What this 13.4% growth in this month has done is, if you look at the YTD growth, which was languishing at around 11% till last month, as against, now I'm talking about the total, not CGST, state and center separately, which was 11.1% till the first half. Now till October, this number growth has increased to 11.4%, which is in a touching distance from the 12% GST growth assumed in the preparation of budget. Now, if you look at this number and try to put it past a previous quarter and see how the economy has behaved, we all know the first quarter nominal GDP growth was stunted. It was 8% because of the inflation, so to say, that measured by WPI was in deflationary mode. It is now coming closer to 0%, and we expect in the months to come it will move in the positive territory. What it is going to do, the nominal GDP growth, which was 8% in the first quarter, although the real GDP growth in second, third, and fourth quarter is likely to be lower than the first quarter, but because of the GDP deflator growth will be better, we may see a higher nominal GDP growth. Now, if that happens, then what we are going to see is the GST growth will improve from here. It may not attain a all-time high or breach April 23 number in absolute term, but in YOY growth term, the growth is likely to improve. And what it is going to do, because we had seen the personal income tax and the corporate tax collection numbers, which is released by the Controller General of Accounts, those numbers are showing very strong growth. Again, there are stories of 2 quarters. First quarter shows something else and second quarter shows something else. So most likely in rest of the third and fourth quarter of this fiscal, the number is likely to be better. Now, that is what this GST number is going to show how it is going to behave. But we should be very careful in projecting based on 1 month number and saying that the situation is very, very good.
Now, similarly, you talked about the nominal growth rate, and once when we talk about the nominal growth rate, the one thing which comes in our mind is the fiscal deficit. We have talked about 5.9% as the budget estimate for the current fiscal. And going by the trend in both the direct taxes as well as the indirect taxes, the expectation is that we may be able to limit the fiscal deficit according to the budget estimate. But if the nominal growth rate is higher, and if I recall what Mr. Shaktikanta Das, the RBI governor, said, that the second quarter number will be a surprising one on the upper side. So do you see any kind of change in the budget estimate of 5.9%? Can we expect lower than 5.9% if the trend continues?
Look, Shishir, there are some pressure which is building up from the expenditure side. Because if you look at revenue expenditure growth, which was assumed in FY24 budget, was mainly 1.2 odd percent or so. And what we see, the data available, YTD, it is growing at 8.9% or so. All right. The chances are that the fertilizer subsidy, there will be additional requirement. Monsoon rainfall not being up to the mark or below normal, chances of more expenditure requirement in Manrega. So there is pressure which will be there. There'll be the likely pressure from the disinvestment side also. Now, what is going to happen is the revenue growth has been pretty strong. So that will, as of now, will be able to take care of additional expenditure which will be required for Manrega, your fertilizer subsidy, or shortfall in your disinvestment receipt. And when we look at the ratio term, if the nominal GDP doesn't grow to the 10.5%, which was assumed in the budget, that is also going to put a pressure on the 5.9% number. So we believe, all in all, if we look at all these numbers individually and sum it total, I think they'll be able to achieve 5.9. I think if the revenue performance is pretty good and expenditure is controlled, then they will go for maybe some more expenditure on the schemes which are providing relief to the vulnerable sections.
Okay. And since it's an election year, so we can expect some more expenditure that will certainly have an impact on the revenue expenditure. Now, coming to another set of number, that is the core sector number, auto sector, that the dispatch, and the PMI manufacturing. Core sector is for the month of September. It is showing a very good sign. When we talk about the auto number, which is the dispatch number for the month of October, it is also showing very good sign. But PMI manufacturing has slipped. How do you see these three numbers together?
Shishir, again, I'll take you back to the definitional issue. Because the PMI, which unlike all other numbers which we measure in terms of YOY, PMI is always with reference to the previous month.
That's the sequential one.
Yeah, that's the sequential one. And that we should keep in mind. So we are talking about October number, right? And with reference to the October, even if you ask anyone in the street, the August growth, IIP growth, which was in double digit, right? And most of the festive stocking and all those had already started, with a global demand behaving the way it is. And on top of it, on the fragile global demand, there's impact of Israel-Lebanon issue. With reference to September, it is saying the weaker. But if I look at the main measure or main thing which PMI tells us, whether the economy is expanding or economy is contracting, right? That's the main indicator which I look at in PMI, which still PMI is still around 55, tells us the economy is not going into contractionary mode on the sequential basis. Yes, the economic activity will be weaker compared to the September, but they will be in the expansionary mode. Now, since you have raised this issue, because again, it is a continuity and whether the sustainability of that growth, which number which we see. Now, whether we're talking about inflation, one month dip or 1 month increase doesn't have any bigger impact. Yeah, it has impact on sentiments, but if you look at from the economic policy point of view, it's the sustainability which is more important. We may grow 10% in one quarter, whether we will be able to maintain that momentum. So the same issue is here. We are still in the upswing mode. We are still in the expansion mode. So as per PMI, we should continue to expand, although maybe at a slower pace compared to what we had done in the month of September.
Okay. Now the big issue is about the inflation number. And before the inflation number, one worrying factor is the monsoon. And we have seen that there has been below normal monsoon. And also that has affected what we call as the output estimate for the crops. And
Right.
since agriculture has contributing much in the overall GDP growth rate, and if the agriculture is affected, then of course the GDP growth rate will also be affected. So what kind of scenario you see there because of the lower estimate of the crops?
So you remember, like right in the beginning, we talked about the fiscal number and we talked about additional requirement may be there for the Manrega. It is precisely from that point of view. So if you look at the GVA, gross value addition, yes, if you look at the agriculture is what 16-17% of overall gross value addition, not a significant part.
Hmm.
If our more than half of our labor force is employed in agriculture, is either as a cultivator or as the agricultural laborer,
Hmm.
the kind of demand it generates in the economy, right? And if there is agriculture output losses or agriculture output growth is not in line with the expectation or agriculture output contracts, we get this direct impact from the inflation side. And the moment inflation goes up, you have the classical monetary policy impact, and then everything go haywire in the economy. Despite India being a services-led economy, uh, unfortunately, we moved to the third level of economic development straight away, jumped from agri to services, and in between we missed manufacturing. Despite being the service-led economy, the impact of agriculture or in on Indian economy is much higher than what it is shown by the its contribution to GVA.
Mhm.
A lower agriculture output or slower growth. We are expecting somewhere around 2.5 to 2.8 kind of GVA growth, agricultural GVA growth in this fiscal year. Uh, Naturally, the consumption demand is going to be impacted. Uh, we are already seeing at the economy level the whether I should say the K-shape kind of, or the haves and have-nots, the rich classes. You just talked about the automobile sales. Uh, there is not much impact. In fact, they are growing, still growing in the double digit.
Mhm.
But what is going to happen is overall consumption demand is going to be impacted. The need for the government to take some of the measures to vulnerable sections of the society, whether one will term it as reverie or whether we'll term it as the intervention. That is, anyone can term it as whatever they like. But bottom line is, if agriculture is impacted, we are talking about nearly half of our labor force getting impacted, consumption getting impacted, inflation may go up, monetary easing may be pushed for another quarter or so, and the economy may not be able to grow consistently at the pace at which we are expecting it to grow.
Now, my final question to you about the inflation, because the another high frequency economic indicators which are scheduled to come on 12th of this month.
Mhm.
I think the 12th is Sunday, so we are expecting it on 13th
11.
of this month. Yeah, 13th of this month,
No,
because
no,
normally
okay. Yeah, 13th of this month, right.
13th of the month. So, what kind of projections you have considering the consumption demand and at the same time the monsoon situation? So, considering all those factors, what is your projection for CPI numbers for the month of October?
But Shishir, what we are expecting in this month and coming months, the inflation will be around 5%. So similar to in that very narrow band, stable at around 5%. We had some impact because we had the Navratri, so you may have the higher fruit demand. So inflation may go up. Generally, if the festival's falling on the same calendar month, then over YOY that get corrected. But since everything is delayed this year, like Diwali falling in November, so in November you may say a higher number compared to last year, Dasra falling in October. So all in all, it is likely to be somewhere around 5%. We still look at the RBI inflation target at 4%. We don't look at it like 6%, like if anything, if inflation is below 6%, everything is fine. No. Since there is inflation targeting of 4%, the 4% range, unlikely that in this month and coming months, it is going to touch somewhere there. It is going to be somewhere around 5% odd.
Mr. Pant, thank you very much for talking to us.
Welcome. Thank you.